NBIS is trending down 7.32%. This is Friday, the 20th of February 2026. The stock is a focus of debate after its recent earnings showed a massive annual recurring revenue growth and its first positive adjusted EBITDA. Yet some investors link its volatility to broader AI infrastructure funding challenges. Despite this, significant institutional accumulation and bullish analyst upgrades are driving a strong community conviction in its undervalued growth trajectory as a leading AI hyperscaler. Investors are also assessing its strong institutional backing and recent bullish analyst coverage, which emphasize its long-term growth trajectory in AI infrastructure. The community of investors and traders is actively discussing its distinct business model and positive operational momentum, often differentiating it from broader sector related volatility. Okay, so the stock before now picked up a bounce on the 6th of February and maintained it up to yesterday, the 19th. So let's just say today it is taking some profit. Yeah, let's say that is what is probably happening. Indeed, other stocks, other AI infrastructure stocks are also showing weakness today. CoreWeave, there's doubt about yeah, for the same all of them I think funding challenges. CoreWeave is actually down up to 10% or thereabout. APLD equally down, not as much, but down right roughly around right about the same margin, about the same yeah, right about the same by the same proportion as well. Yeah. What we're looking at right now is an extrapolation that is saying that this weakness might remain in place all the way towards early April. That's a long time to come. Yeah, a long time to come. A lot may happen. Not, I mean, a lot may happen between now and then. Yeah. Okay, so we have projections that are saying 89.47. It's a downward projection. 101.12 upper projection. 111.66. 118.18. Underlying trend strongly bullish. So the stock is this weakness is within a longer term bullish trend. Okay. Yeah, let's see now. Let's have a look at the price pressure momentums. Before we do that, let's see what's the probability of it retesting yesterday's closing price of 107.61. Let's see. Probability is less statistically less than 50%. But even at that, there's still a probability that it might be able to do so. Yeah, still there's still something there anyway, regardless, even though it's less than 50%. Okay, let's see what the price pressure momentums might tell us about what may happen, whether we should expect volatility indeed. Yeah, we should expect it based on the 10-day moving average. It's the algos are sensing that we might see, especially from between now and early March. Yeah, volatilities, we should expect that. If anything, stability is expected from maybe the 12th of March towards from the 12th of March towards the 24th of March. But that's still a long time to come. Yeah. So if anything, there's a chance that by Monday the 23rd we may still see lower prices, but it may well reverse this by the post market session. So volatility is expected based on what the 10-day moving average in the very short term. We should expect that. Let's have a look at the 21-day moving average. Okay, yeah, it's a lot more stable, a lot more stable. Up till I would say up till the 10th of March. So there is an indication that if this weakness may not have far-reaching effects on the 21-day moving average. Okay, so quite stable, yes, pretty much stable, at least up till the 10th of March in the intermediate period. Let's have a look at the Price pressure momentum 3, the 40-day moving average. Okay, yeah, stable at least up till the 2nd of March. After that, not so stable. Not so. We're expected to see a decline and then maybe some stability from the 10th of March. Okay, from the 10th of March to early April is expected to remain stable. So I think we should. Maybe it might begin to react to some of the volatility that has played out earlier on. Yeah, maybe that's why we're not. It's not as stable as a 21-day moving average. Let's see whether the 200-day moving average is expected to remain stable or expected to react to what's been going on. Okay, not as stable, not as stable, not as stable. Yeah, not as stable. Yeah, so I think our best bet is the 20-day moving average, 21-day moving average. So in the interim, it has just for some reason, um, yeah, not very much is expected to affect it. So what is that telling us? Yeah, maybe this volatility is not that it's not really going to be that far reaching. And remember, we are looking at between now and early April. The 40-day moving average and the 200-day moving average may not give us a very good picture of what's going on. But the 21-day moving average is sensing that not very much is going to affect it. Okay, so maybe not very much. I mean, yeah, this may happen on the 10-day moving average, yes, but may not be that far reaching, may not. But okay, we'll see. We'll see. Let's see now the weekly chart. We may see something there. No extrapolations. Okay, here lower prices are expected to continue to print up till the 6th or 13th, Monday the 13th. No, no, yeah, Monday the 13th of March of April. Then after that, we might get a bounce, but not expected to challenge its 40-week moving average. After that, we are looking at the prospects of the downtrend resuming and remaining in place up till the end of August. Here we have to also look at the moving averages and see, do we start with a 200-week moving average? No, volatility is expected up till then, up till the end of August. Yeah, so this also gives us the whole picture. It gives us a deeper picture of what we should see. It's expected to, in the long term, it's expected to remain volatile. Yeah. So this is yeah, you can see here volatility. This is the 40-week moving average. Yeah, I mean it's not out of place. These are high. I mean these stocks are right in the mix of what is going on right now. This is the 21-week moving average. Yes, volatility as well, but a lot more stable for some reason. A lot more stable. A lot more stable. A lot more stable. Yeah, especially up till the 22nd of June. But long term volatility is expected long term. But for some reason, in the very short term, it's just remaining stable. This is the 21-week moving average. Let's have a look at the 10-week moving average. The 10-week moving average, yes. Okay, yeah, quite volatile, quite volatile, but not as bad as the 40-week and the 200-week. So that tells us a lot. So we should expect overall. I think it's not really going to be stable. Very short time in the very short term, some stability, but overall, the bigger overall in the coming weeks, it may get rocky. It may get turbulent. So have a look and see what you make of NBIS. And thank you very much for watching this video.